All right. Hey, traders. This is Christian from Tribeca Trade Group. And this is a quick, should be a quick video on an educational post talking about dark pools, talking about block trades. They garner a lot of interest on FinTwit, right? So on financial Twitter, right? You hear, oh, there's a dark pool print that went up. I'm going to talk a little bit about these, and I hope it can kind of give you some clarity in reference to what these are. Why am I specifically doing this video? Because I used to be a block trader. I used to be a block trader for Merrill Lynch, Bank of America, Merrill Lynch, when Bank of America bought Merrill Lynch. So I used to be what's known as a block trader for institutional trading on the ETF side. So I was only one of two or one other traders at the time, basically when I worked on the desk, which is about 2004 to about 2014. And I traded institutionally. I worked on a Delta One trading desk, and I traded some other products. But hedge funds and big institutions trade big block trades. So we used to facilitate those orders. They're also called risk markets, right? Because a lot of times what happens is an institution, they can't go to they can't just trade a huge block of stock or an ETF, right on the screens. So they need help, with that order. So, and a risk trade is basically they're calling up their broker and saying, hey, show me a market. I want to buy 1 million shares of this, or I want to buy 500,000 shares of this, right? And that requires, sometimes there are working orders where I would go ahead and work the order and then give them back the price. But these are fast money type, hedge funds. They just want a price and they want to be done, right? And that often entails, if it's a very large block trade, giving a price away, a little bit away from the market. Right. So we're going to talk about that in a minute. And again, why is it done away from the market? Well, because it may take like a half a day, depending on what ETF or stock it is. It could take several days to hedge that position, right? Because of the liquidity, right? So it's very different. So for example, if you're trading, it doesn't matter what stock, but say it's Amazon, right? And you try to trade, 500 shares, right? It's not that big of a deal. If you try to trade 50,000 shares, right? You're going to have impact. You're going to move the stock. Okay. So let's move away from, this is the risk disclaimer. Make sure that you go ahead and read, everything. But so here's the issue is that a lot of people say, oh, it's a dark pool transaction, right? So I would make sure that you understand what a dark pool is. So basically what a dark pool is, right, is a lot of different brokers have organized a pool where it's anonymous trading, and it's really done for liquid stocks. So if you have a small cap stock that maybe only trades 200,000 or 300,000 shares a day, and you're trying to execute, say, 50,000 shares, right, where that you're going to be, or you've got 100,000 shares and the stock only trades 200,000 shares, right? That you're dealing with a very illiquid situation, and you may place a portion of that order, maybe 10,000 shares, and hope for some natural liquidity where someone is, if you're looking to sell, right, there might be a buyer, right, that you can match up with anonymously. So again, what usually transpires in these dark pools, smaller illiquid names. Now, every once in a while, you could put some more liquid stocks in there, but that's the primary use of a dark pool. Now, what happens is, well, the reporting of this is a little bit funky, right? If something does go into a dark pool, it doesn't have to be reported at the end of till the end of the day, right? So you may see these blocks that go up at the end of the day. What'll happen is they'll have a modifier on the position, right? So what a modifier is, right, so I'm looking at SPY, and I'm going to walk you through why SPY is a bit more complicated. But you see these different prints on them. So for instance, R6, right? This is like a FINRA type print. Now, they will go up for whether it's a dark pool or whether it's a block trade, because it's the same, your traders are using the same exemption for them, right? So when these dark pool prints they get an exemption, and they have to be coded as such, so that, so they have to be coded as such, so that whatever broker is executing them follows the necessary rules. Now, for a block trade, they actually get very similar modifiers, and that's where the confusion comes in. So you hear all the time, oh, this, look at this big block of shares, this was a dark pool print. No, not really. It's a block trade, right? Another thing that you hear all the time, this went up on a private exchange. No, not really a block trade. So there's no special, like, fancy. I think people use these terms to be very fancy, to think that there's something crazy going on with institutions. It's basically just as I said, right? So let me give you an example. Okay, so there's a couple reasons why you see all these. So this is where it gets complicated, right? And I hope to provide a little bit of, hopefully you'll get some transparency out of this. But for SPY is one of the hardest securities to analyze, whether something is bought, sold, because you'll see all these prints that happen after hours. So what happens a lot, right? There are institutions who will trade pretty big blocks of SPY. They'll trade 500,000 shares. They'll trade 1 million shares, right? And when they're trading 1 million shares, right, they probably, right, they've got conviction. They probably just want to buy 1 million shares very quickly. They don't care so much about the price, because SPY is one of the most liquid things out there. Right? Let me just make sure I'm recording this video. I am recording. Okay. So what happens is, right, you'll still have some impact, even though it's the most liquid. So a hedge fund will call their broker, right? It could be Goldman, could be wherever, and they'll say, hey, show me a market for 1 million shares of SPY, right? And the broker will quote two-sided market. Or if the hedge fund wants to be particular, they'll say, hey, I need to buy 1 million shares of SPY. Show me a price. The broker gives them a price, usually right around the offer, or maybe a penny above the offer, because they know they're going to have a little bit of issue getting the same exact price on the screen. What most of the brokers will do, if they're savvy enough, for like 1 million share order of SPY or something in that realm, sometimes it could be 2 million shares, right? What they will do to help facilitate the orders, they'll trade S&P futures, because S&P futures are actually a bit more liquid. So what will happen is, so if you think about a broker's book, right, S&P futures are the exact same thing as SPY, right? There's a little bit of, I shouldn't say the exact same thing, but they both track the same index, the same basket of securities, right? But there's a little bit of difference between, like, how they're priced because of the dividends and the time to the next futures expiration. But if you want to find liquidity, right, you will actually go into the order book, and there's major depth behind S&P futures. So boom, right? So let's say that the hedge fund wants to buy 1 million shares, right? The broker sells them 1 million shares, and they go in the market and they buy the equivalent of 1 million shares of S&P futures, right? And every market maker has, a spreadsheet or something in their system that tells them the equivalent amount of futures that they need to purchase for this type of block trading, right? Now, what will happen on the broker's broker's balance sheet? They will be short 1 million shares of SPY because they sold it to a client, and they will be long the futures. Now, they don't want to hold that position. So what they do at the end of the day is called an exchange. It's called an EFP, right? It's called exchange for physical. So what they're doing, right, is they're going to collapse that position. And I won't get into all the mechanics of how they do that, but there's what's known as a creation that has to be done. You could do it with another broker, right? But they're collapsing their futures position with that SPY position. Okay, so number one, an original block trade goes up, right? Whenever that 1 million share hedge fund order was, right? And it will go up with an R6 modifier. Again, it doesn't mean it's in a dark pool. It doesn't mean it went up on a private exchange someplace, right? It just means it's a negotiated trade. It's a block trade. right? Don't think about this magic private exchange that everybody's meeting up on that happens someplace. No, it's just a negotiated trade. And what happens is the trade has to go to the tape, right? So it's being negotiated probably either over the phone, or it could be even in an IB chat. Once they agree upon the price, it's the broker's responsibility to print that trade to the market. It will go up as an R6 usually, because sometimes it won't go up in the confines of the bid-ask spread. If it happens to go away from the spread, they put a modifier on it, and it's the same modifier for when a trade actually happens in a dark pool. So they're using the same. So that's where the confusion comes in, is that they're using the same modifier. Okay, now that's the first trade. The second trade, to collapse the broker's book, happens usually at the end of the day after 4 o'clock, right? And they're usually going out, you'll see this, it goes out to, the price will go out to 4 digits, right? Because you want to be super exact in terms of how you're collapsing the price of the futures position with the price of the SPY, what's known as NAV, right? So whenever you see things go up, and sometimes the trades because what happens is you don't know the NAV until tomorrow. NAV, by the way, is net asset value, right? Every time for ETFs, right? There's a closing print for ETFs, but really what's important for ETFs, because there's a basket that tracks all of the, for instance, the S&P, there's 500 names, right? So there's what's called the net asset value of where all those 500 names closed, right, in relation to the divisor. Okay, so that's what's known as net asset value. And you can see every day this is published, but it doesn't get published till like 6 o'clock or something like that, right? So the NAV is 389.68, which may differ slightly from the closing price, because again, the NAV is derived from all the names that are in the underlying basket of SPY and where they closed at. So that might be slightly different, right? We're talking about usually a couple pennies. Okay, so that gets printed at the end of the day. So again, that's just the collapsing of the future. There's no market impact with that. Okay, so that's another type of trade that you may see after the close. So let me speed up here for a minute, right? Can you extract value from some of these trades? So again, they're not dark pool trades, right? They're not trades that are going up in a magic dark pool and getting filled. They're block trades. They're negotiated usually with when you see 500,000, 100,000, right? And again, it's not on some private exchange. They just have to print the trade because it is a negotiated trade. Okay. Now, is there some value to adding this, to looking at this? Well, being that SPY is the most liquid thing out there, or one of the most liquid things out there, there's really not that much value. And if you look at so one of the things that I do analyze on a day-to-day basis is what's known as creations or redemptions. When you do one of these size trades, right, because you're doing things like futures, sometimes you may actually, instead of, this is SPY. Let's say that we're talking about another ETF like XRT or ITB, right? That doesn't have futures, right? The broker may facilitate the order by executing in the underlying basket. So what do I mean by this? So if you look at ITB or any ETF, right? And of course I have Bloomberg, so it's very easy for me to see, but you could go to the website. There's a basket that tracks this, right? Now, so if someone wants to come in and buy 2 million shares of ITB, where the majority of the liquidity is in the underlying basket, right? So they're actually going to go out and start executing. So let's go back to the original, let's go back to what happens in real life, hypothetically, is that a hedge fund says, hey, I want to buy 1 million shares of ITB. Show me a price. Well, the broker is going to get ready to start executing that trade, and they're going to start getting ready to find the liquidity, which a lot of times is in the underlying basket. Let's say that they go ahead and they do execute most of the trade, which brings up another good point, by the way. Never look at the ETF and the volume and say, oh, geez, this thing isn't liquid. It may be super liquid. The liquidity is driven off the underlying basket, okay? So anyway, I don't want to get off track there, but what will happen is hedge fund says, I want to buy 1 million shares. Broker gives them a quote of whatever price, and again, it may be a little bit away from the market, the broker will start hedging, right? Because 1 million shares or 2 million shares, it's going to take a little while for them to hedge that trade, right? There's a price for that, right? So that's the negotiated price. The price that they agree on will go up on the exchange, and the hedge fund will now be long 1 million shares, and the broker will be short 1 million shares. And what they'll start doing is probably buying the underlying basket. And then at the end of the day, now they're going to be short 1 million shares of ITB and long the underlying basket. They will do what's called a creation or redemption, right, at the end of the day. And that creation will collapse their short position, and they'll turn over the underlying basket to the custodian of the ETF, and that will flatten the position out. The very next day, what you'll see is a creation. Right? That means somebody bought. So when I put out, sometimes I'll tweet this out the next day, hey, what were the biggest creations or redemptions? Right? Those are based off the block trades and buying and selling. Right? So yes, there is some value in, going through and seeing what ETFs are growing in size that are having inflows versus outflows, which ones are being sold. So yes, there's some value that can be extracted by saying, okay, look at this, look at all the inflows that are going into this ETF. But I could tell you, right? So, and I think I may have this up from earlier. If I don't, right? So here's inflows, right? For IEF. So you could look at the bottom of the screen, inflows, outflows, inflows, outflows, right? This is a bond ETF, which saw a big inflow, right? And this is I'm on the weekly chart. So let me bring in, right? So this is what this looks like. If you want to look over 1 year, right, you could see that there's been a little bit more inflows going in. Somebody's been buying the dip a little bit in IEF. What about SPY? Is SPY useful to analyze every block print that hits the tape? This is what the inflows and outflows look like. So you can't so the conclusion here, it's very difficult to analyze every block that goes up in SPY. There's so much noise with it. I used to do this for a living, block trade and work, work on an institutional trading desk. There's really not much value in looking at every block trade in SPY and thinking that they know, because also SPY is used for so many different reasons. A lot of times what hedge funds use SPY is for hedging purposes, right? You also see a lot of option prints for that, but you could see by these inflows and outflows, it is extremely noisy, right? To know what's going on in terms of what the intentions are. If they're first of all, a block of 1 million shares, 2 million shares isn't going to really move the market for more than a couple seconds, and then it goes back into balance. All right. So in any event, I hope this video helps. I hope it gives you a clear understanding of that the majority of these trades are just that you see headed tape and somebody says dark pool, dark pool. It's not a dark pool print. It just has the same modifier as a block trade, right? So again, this is defined by FINRA, right? And FINRA did make it complicated by having the same type of modifier that has to be used for whether something actually does occur in a dark pool versus just a regular block trade. All right, guys, thanks for watching. I hope it helps. Have a great night.